Most people are completely missing where the money is going in AI. Hello, I'm Lynn, and this is Lynn's 10-Minute Alpha, your 10-minute edge in finding the biggest opportunities. Everyone is watching NVIDIA. Everyone is watching OpenAI. But the real capital movement right now is happening somewhere else, and it's about to hit public markets. SpaceX. Because what's about to happen is not just another IPO. It could be the largest IPO in history. And more importantly, it could redefine how capital flows across AI infrastructure and even Tesla itself. SpaceX is preparing to file its IPO prospectus within days. Expected raise over $75 billion, valuation between 1.5 and 1.75 trillion dollars. Let that sink in. This is not a startup going public. This is a trillion-dollar infrastructure platform entering public markets. And the core of that valuation is not rockets. It's Starlink. Over 9 million users, more than $10 billion in annual revenue, and potentially 50 to 80% of total earnings. That means SpaceX is not just a space company. It's a global data network. Now, here's where things get interesting. AI is not just about models, it's about infrastructure, compute, data, distribution. And SpaceX controls all three in ways most people don't fully understand. Starlink is a global data layer. Satellites provide connectivity where traditional infrastructure cannot. And if you combine that with AI, you're looking at a system that connects intelligence directly to the physical world. That's why this IPO is not just about liquidity, it's about positioning. Now, here's the part most people are missing. There's a growing narrative on Wall Street and in private discussions. After the SpaceX IPO, the next move could be a merger with Tesla. Not confirmed, but increasingly discussed. And if that happens, everything changes. Let's break this down simply. If Tesla and SpaceX merge, it's not cash, it's stock for stock. That means your Tesla shares get converted into shares of the new combined company. The key variable is valuation. Let's say SpaceX equals 1.75 trillion, Tesla equals 1.19 trillion, combined equals 2.94 trillion. Tesla shareholders would own about 40.5% of the new entity. But here's the critical point. That percentage changes depending on Tesla's price. If Tesla is cheap when the merger happens, you get a smaller piece. If Tesla is expensive, you get a larger piece. Let's run scenarios. Tesla at $250, about 31.6% ownership. Tesla at current levels, about 40.5%. Tesla at 500, about 48%. Tesla at 700, over 56%. Same shares, completely different future ownership. That difference compounds forever. This is not a short-term trade. This is permanent equity positioning. Here's where it gets uncomfortable. From your perspective as a Tesla investor, you want Tesla as high as possible before the merger. But from Musk's perspective, it's the opposite. Why? Because his ownership is very different. About 42% in SpaceX, around 16% in Tesla. So if Tesla becomes too valuable, his control in the combined company decreases. That's not speculation, that's math. Let me simplify this. For every 1 trillion in value, from SpaceX, Musk captures far more, and from Tesla, significantly less. That creates a natural incentive. Capital, attention, and strategy will tend to flow towards SpaceX. Not because of intention, but because of structure. Now look at what just happened. A massive chip facility project. $200 to $250 billion. Tesla leads construction, but 80% of the output goes to space-based AI systems. Only 20% goes to Tesla applications. That's not random. That's alignment with ownership incentives. And more importantly, it looks like pre-merger integration. The systems are already merging before the companies do. Here's the timeline you need to watch. Step 1, SpaceX IPO, likely within months. Step 2, post-IPO stabilization period. Step 3, potential merger discussions. Earliest realistic window, late 2026, more likely 2027. And here's the key political factor, before the 2026 midterm elections. Because regulatory environments change and timing matters. Let's break this into scenarios. Scenario 1, merger happens. You now own SpaceX, Starlink, xAI, Tesla, energy, robotics, a full stack AI plus physical infrastructure empire. Upside, massive integration. Downside, valuation, multiple compression. Scenario 2, merger delayed. Regulators step in, process drags into 2028. Tesla trades in a limbo discount zone. Supported by merger speculation. Suppressed by uncertainty. Scenario 3, no merger. Tesla remains independent. Robotaxi narrative plays out. Potential valuation expansion. But you miss SpaceX upside entirely. And so, what's the real insight here? This is not about headlines. This is not about hype. This is about incentives and math. Musk's control is a decreasing function of Tesla's price. That's the signal, not tweets, not rumors, just structure. If you understand where capital is flowing, how ownership is structured, and how incentives align, you don't need to predict the future. You just need to position ahead of it. If you want to stay ahead of where the money's going, like and subscribe. More alpha coming.